Tired of chasing hot tips on the KLSE only to see them fizzle out? Today, we cut through the noise and explain who topped August, and more importantly, why they ran, and how to spot the next wave before it breaks. You'll walk away with a simple checklist to apply this playbook to your own portfolio. This video is adapted from my latest in-depth Substack deep dive. I'm Iggy from the Investing Iguana, a Singapore-based market analyst. I help SG investors turn complex market moves into clear, practical steps. We'll move in this order, following the article's structure. Decoding August breakout stars, Syme Darby, CIMB, Petronas Chemicals, Beyond the Blue Chips, construction and technology, and we'll finish with what this means for you, an investor's action plan. August 2025 was the KLCI's strongest month in 2 years. Big lift came from technology, construction, and financials. Don't just note winners, get the drivers. That is how to separate momentum from mirage. Visual summary from the article's table. Syme Darby up about 27% with a healthy yield. CIMB up roughly 13% with solid capital ratios. Petronas Chemicals up double digits but with shaky earnings. Caraza and Gamuda riding structural trends. Hume linked to building demand. Think of this table like a leaderboard that also flags the engines behind each name. Which ones score on both price and fundamentals? That's the key filter. Quick pulse check. If a stock rallied, did fundamentals confirm? If yes, momentum can re-rate. If not, expect chop. Have a watch list ready. Which names fit a Singapore investor's mix of stability, income, and growth? Syme Darby led the index with a surge. The company posted strong FY 2025 profits, with one-off gains, but also solid core earnings. The motors division, helped by EV sales, and the industrial arm, tied to resources, did the heavy lifting. That diversification matters. It reduces single-engine risk and supports a durable re-rating. From the article's segment table, motors versus industrial both contributed, motors slightly ahead on profit. This balance tells a story. Even if EV cycles slow, industrial cushions. And if resources wobble, motors can still carry. Add the cash returns, dividend declared, and this isn't just a trade, it's a stable anchor for an income growth slot. Verdict aligned with the article. Buy. For SG portfolios, this can sit in the core bucket. Think SRS or dividend sleeve, matching a need for income plus steady compounding. Before buying, set rules. Buy zone, position size, yield on cost, target. Would Sime be the OCBC of Malaysia in the portfolio? Steady, boring, compounding? That's the role to expect. From stability to cyclicals with safety. Banks. CIMB's double-digit gain was a signal of macro healing. Banks reflect credit growth, margins, and asset quality. The article's key metrics, loan growth in the mid-single digits, NIM near the low twos, CET1 in the mid-teens, describe a bank in control. It's not a rocket ship. It's a reliable engine. The table's takeaway. Growth is sensible, capital strong, payouts consistent. For SG investors, this is a sleep well hold. If using CPFIS or SRS for income, a regional bank like CIMB can diversify away from SGX bank exposure. But expect steady, not hyper growth. Is CIMB the portfolio's ballast, keeping the ship stable when tech gets wavy? Verdict aligned with the article. Hold. Add only on dips or when macro signals point to sustained credit acceleration. Now, when a stock rallies but earnings flash red, what then? PCG had a headline gain, but the earnings table tells a different story. Net loss in Q2, plant utilization down, revenue softer. The market often shrugs a weak quarter in a strong tape. But for risk control, fundamentals win in the long run. The article's table summary: revenue downtrend, utilization slipping, EPS negative for the quarter. That's a cluster of red flags. If holding, trim to comfort. If buying, wait for a confirmed upturn in utilization and spreads. Picture it like a factory. When the machines run slower, profits fall. Wait till they run hot again. Verdict aligned with the article. Hold, reduce. For SG investors who prize dividends and low volatility, this sits outside the core. Treat as a trading or turnaround slot, not an income anchor. With the blue chips covered, let's talk where the action heated up. Small and mid caps tied to megatrends. Small and mid caps move with sector wins. The sector table in the article ranks performance. Technology led, construction next. Financials, building materials, then chemicals. 2 lessons. First, sector tide carries many boats. Second, pick companies with operating leverage to that tide. Use a simple mental model. If the sector gains 10% and a stock has clean balance sheet, order book visibility and margin expansion, that stock can outrun the sector. That's where alpha hides. Let's zoom into the 2 engines of August, construction and technology. Construction. Malaysia's infra pipeline drove demand. Gamuda continued its momentum backed by a robust order book and regional projects. The read-through is simple. When shovels hit dirt, earnings visibility improves. This suits SG investors who like REIT-like predictability but want higher growth than a pure yield play. Technology. Caraza rode the semiconductor upcycle and localized supply chain wins. Onshoring and regionalization steer orders toward Malaysia. For SG investors, treat this as the growth sleeve. Expect higher volatility. Use rules. Stagger entries. Set trims on sharp rallies. And review order momentum every quarter. Hume Cement. Building materials often trail construction by a small lag. If infra stays hot, materials catch a second wind. But they live with input cost risks, so watch energy costs, utilization rates, and pricing power. If the construction train continues, which seat is safer? Contractor with order book or materials with margin sensitivity? For growth, Caraza fits the selective bet profile. For stability plus growth, Gamuda is the steadier pick. Now let's turn this analysis into a simple action plan. First, look for sector-wide tailwinds. Technology and construction are not one-month wonders. They are multi-year themes tied to supply chain shifts and infrastructure cycles. Express the view via blend, 1 stable compounder and 1 higher beta growth name. Second, dig deeper than the headline number. As PCG shows, a monthly gain can mask weak fundamentals. Read utilization, margins, order books, and cash conversion. Price is the headline. Fundamentals are the story. Third, balance blue chip stability with high growth potential. Use a 3-bucket approach. Core income growth, Sime style, defensive financials, CIMB style, and thematic growth, Caraza ka Gamuda. Syme Darby is a buy for the core. It fits the get paid while you wait bucket and has multiple engines. CIMB stays a hold. It's a sensible diversifier for regional bank exposure, but not a hyper-growth story. Petronas Chemicals is hold reduce unless the utilization and pricing data turn. For cyclicals, data beats hope. For growth, Caraza offers torque to semis. Keep position sizes honest. For steady growth, Gamuda matches infra visibility with execution. For SG investors, fund the growth sleeve with surplus cash, not CPF. Use SRS or cash to balance tax and liquidity needs. Set rules, max position size, add-on triggers, and clear exit points. Think of it like HDB renovation. Plan the budget, phase the works, and avoid scope creep. If the KLSE stays strong but leadership rotates, which bucket in your portfolio needs the next dollar? Core, defensive, or thematic? Quick recap in the article's order. August Winners rode sector tides. Syme Darby re-rated on real earnings power. CIMB reflected macro healing. PCG's price pop hid weak internals. The real action came from construction and technology. And the plan is a 3-bucket strategy with rules. You can take these lessons into your SG investing journey and build a portfolio that compounds through cycles, not just 1 month. If this helped, drop a like, share it with a friend, and hit subscribe. For the full written deep dive, tables, and playbook, join the premium Substack, link below.